Hello, everyone, and thank you for joining us today. We're going to be speaking to Laura Fan, the head of funding at the Treasury Division at the Inter-American Development Bank, and Amaro Cosme, who's the director of funding management investor relations at the Caisse de dépôt et placement du Québec. So thank you both for joining us today. We really appreciate you taking the time to speak to our audience today. I'm going to start with you, Laura. What is the size of your funding program?
We're expecting to borrow $26 billion this year. The program was actually increased from the originally projected $25 billion due to the higher than expected loan disbursements. And this comes off an IDB record borrowing program last year of $26.8 billion.
And what are your plans to return to the Canadian market for funding?
Well, the Canadian dollar is a strategic currency for the IDB. And so in order to meet the demand from investors, we want to build a liquid curve. And our plan is to tap the lines that are under Canadian 1 billion in size and to issue at least one new line every 1 to 2 years. So this year so far, we've borrowed 1.35 billion Canadian dollars via taps of our old 5-year and 7-year. And this compares to 1.5 billion Canadian dollars issued last year and 600 million Canadian dollars issued in 2019. As a matter of fact, for this year so far, the Canadian dollar is the second largest currency of issuance behind the US dollar, and last year it was number 3. So we continue to monitor the markets, and to the extent that the swap market is there, then we could consider an issuance opportunity.
And what is the ideal maturity for your funding?
The ideal maturity is around 5 years. However, due to the flat yield curve in the US this year, we were able to fund larger sizes and longer dated maturities. So our average life for this year actually stands at just under 6.3 years, whereas in 2020, the average life was slightly shorter at 4.8 years. So as you can see, we typically target around 5 years for new borrowings.
And Amaro, what is CDPQ's funding strategy going forward?
Yes, good morning. If you allow me just maybe to summarize, our main focus has been and remains to develop and maintain our efficient funding programs. And that basically we're supporting our investment strategies and optimizing our liquidity management. Being a AAA issuer, we have to capitalize on that. And rating agencies have been highlighting our independence throughout various aspects: operational, investment strategy, funding strategy, the low leverage, the quality of our assets on the balance sheet, and obviously our creditors have right of claim over our depositors. So we started our new funding program 3 years ago to establish ourselves as a recognized issuer. And since 2019, we've issued 5 benchmark-sized bonds for a total of $9.5 billion US dollars. And that includes our first green bond issuance that we did earlier this year in the month of May. So we started the US dollar as the anchor for our positioning to building a curve, providing liquidity and price transparency for the investor communities. And obviously, we look at Canadian dollar, for example, or even euro as complementary funding sources. So I would say that if market conditions remain favorable, opportunities to diversify in terms of currency for us are valuable. It gives us opportunity to reach out to different investors and even different tenors. I would say that should we look at Canadian dollar, for example, we will target tenors ranging from 3 to 7 years potentially. Euro market would be something of, given the market conditions and experience that we see for longer duration, so 7, 10 years and over. But each time we would approach a market as we've done with the US dollar, we would do it in a disciplined approach, so appropriate benchmark sizes and with expectations for us to maintain a presence to foster liquidity. So our objective, as has been in the recent past and going forward, is to issue on an average of 2 to 3 benchmark sized bonds a year, potentially more in time, focusing primarily on those currencies and including green bonds as we've initiated this year. And so far, I would say that the investors that we've met, that we've actually did trade with, have been very receptive to these initiatives. For the rest of the year, after our inaugural US dollar green bond, there's a possibility for a second issuance later this fall. And obviously, as I mentioned, diversification, being in terms of currency, is very important for us. So it's a strong consideration, and the green we'll see potentially for next year.
And Laura, going back to you, what challenges do you see facing SSA issuers as we move forward?
Well, basically, I see two challenges related to the topic we're discussing. One is navigating the LIBOR transition. We issued our first US dollar bond with initial price talk based on SOFR. And right now we're in the process of transitioning our assets and liability from 3-month US dollar LIBOR to SOFR. This crosses all markets. And so that definitely is going to be a challenge for many SSA issuers. The second aspect is navigating the increasing regulations, especially with what we are seeing from Europe regarding ESG. So we continue to look at ways to evolve our ESG products, which are the Ibons and the Sustainable Development Bonds. Ibons are our social bond program, standing for E for education, Y for youth, and E for employment. And as of right now, we don't have separate reporting for our Sustainable Development Bonds, as we rely on the bank's general reporting, such as the Development Effectiveness Overview and the Corporate Sustainability Report. But we're constantly evolving, understanding the requirements for new regulations. And so there is the possibility that sometime in the future, we could look at producing a separate report similar to what we are using for the iBond.
And how do you incorporate ESG initiatives within your funding program?
Well, I think I touched a little bit upon that already. So we have two ESG products. We have the Ibons, which is our social bond program promoting the development of human capital in Latin America and the Caribbean. And we have our Sustainable Development Bonds, which emphasizes our subscription to the United Nations Sustainable Development Goals. But technically, an investor could consider all of our bonds to be quote unquote ESG. So many corporates and private sector companies are profit maximizing. So obviously there would be a question regarding factors that imply higher costs. However, the IDB is not a profit maximizing institution. The IDB is a development bank, and our mission, our purpose is to improve lives in Latin America and the Caribbean. And we do that by reducing poverty and inequality in a climate-friendly and sustainable manner. As I already mentioned, we subscribe to the United Nations Sustainable Development Goals, and our corporate results framework has specific targets to achieve each of the SDGs, and this is tracked annually in the bank's Development Effectiveness Overview. So hence, you don't necessarily have to buy just our I-bonds or Sustainable Development Bonds, but you could take a look at the issuer as a whole and make a judgment call that all of our bonds could be considered to be ESG.
And do you ring fence the assets and liabilities for ESG issuance?
Well, the proceeds for our I-bonds and Sustainable Development Bonds are placed into the bank's lending pool. So it does go directly to finance the bank's lending. The only difference between the I-bonds and the Sustainable Development Bonds is that currently, one, the I-bond has a dedicated customized report and a dedicated web page. The Sustainable Development Bonds do not. They have, we rely on the bank's overall reports, as I mentioned earlier, including, for example, the Corporate Sustainability Report, as well as the Global Reporting Initiative Annex. Also, another difference is that the I-bond has a clear allocation of proceeds. So you know exactly what the I-bond proceeds are funding in terms of projects. Currently, the Sustainable Development Bonds do not. The Sustainable Development Bonds fund the bank's lending portfolio. It adheres to the same strict policies as I-projects. However, you don't see that one-to-one mapping, though we may change that in the future.
And Amaro, staying on the same topic, what are your ESG initiatives and funding activities?
Yes, actually, as a global investor, we made actually climate change a priority. We adopted ambitious carbon reduction targets in time, and we're exercising our leadership within the industry and our portfolio companies. I would say that our investment strategy in those matters was developed and implemented in 2017, which enabled us, to work towards a transition of low carbon economy. So in 2017, we had a target of reducing by 25% by 2025 our carbon intensity, but we reached out at the end of last year 38% level, which is very encouraging. And in terms of low carbon investments, which we had a second target, we doubled the amount that we own, as the initial target was to increase by 50% by 2020. So I would say it's significant margin over the targets that we set into 2017. Obviously, we have a net zero greenhouse gas emissions objective for the total portfolio by 2050. And I would say that we're active in very initiatives such as we're founding a member of the UN Net Zero Asset Owner Alliance, and we participate in various initiatives such as Maple 8 with other actually Canadian pension plan investment managers, and that is to promote standardized ESG reporting, for example. I'm actually glad to mention that actually today, as we speak, CDPQ is announcing and renewing its ambitions in terms of ESG, covering the two aspects of our climate strategy. So to continue in investing in low carbon assets and continuing reducing the carbon intensity, but also helping the real economy in the transition phase. So I would suggest for people that have interest to go through our website, for example, or keep an eye on the news today. This should be being announced as we speak, and very interesting and very promising for the future. So at CDPQ, ESG considerations obviously are integrated throughout all our investment decisions, and therefore for us in Treasury specifically and in funding program, it was a natural extension to incorporate those activities into our functions. So it's an additional lever for us to support the strategic sustainability goals. We are a global investor, so we have teams working, for example, in real assets such as infrastructure, where we are active in greenfield projects, renewable energy, clean transportation. So therefore, it provides us great opportunities for a funding program. As I mentioned, we actually issued our first green bond earlier this year. So it's just encouraging, and we have very good prospects for going in the future. We see at Treasury the demand for these sustainability bonds, and with its many forms, as an opportunity really to build investor relationships. We built an open dialogue and trust, and for us, it's an opportunity also to exchange on best practices. So I would say additionally that risk factors associated with ESG have been, part of the risk profile assessment, for example, by rating agencies, but more and more the investors do the same. And the last issuance that we did, we had various conversations with investors, and it was clear for us that is a real preoccupation, and there's real value to consider those aspects as an issuer in our profile. So we see it as an opportunity for us to demonstrate our commitment, our involvement, and our leadership in these matters. Our green bond, I think, was the great success for us, and a great representation of the work that was been done and it can be done in the future. So in May of this year, we've issued a $1 billion US green bond, 5 years, with a book over 3 times oversubscribed. So it was really a great success for us to have that objective of diversification of investors and open dialogue.
And Laura, how has COVID impacted your funding needs?
Well, it definitely increased our funding needs. Like the rest of the world, Latin America and the Caribbean faced an unprecedented set of challenges in 2020 as a result of the pandemic. Regions suffered a historic economic contraction of more than 8% of GDP, and then an estimated 34 million people lost their jobs and at least 40 million fell into poverty. So the IADB responded to the crisis. Our approvals increased by 10% and our disbursements by 38% compared to 2019. And total IADB sovereign guaranteed loan approvals set a record of $12.6 billion last year. So we had a record borrowing program last year, and we continue to have a large borrowing program at $26 billion for this year. And our work to address the region's needs are such that during our annual meeting this year, the IDB's Board of Governors authorized analytic work regarding a potential capital increase. So if the capital increase were to go through, well, first of all, it will take a period of time. It's not like a capital increase happens overnight. It could take a period of 5 to 6 years, but we then would see continued levels of higher borrowing programs going forward, rather than reverting to our pre-pandemic borrowing program sizes of around $20 billion or so.
And Amaro, what have been the impacts of COVID on your funding needs?
Yeah, CDPQ is an asset manager per se, and we have a long-term investment horizon, and we benefit also because we have in place a robust, I would say, liquidity risk framework. So we're not typically exposed to very large liquidity outflows. And so luckily, liquidity wasn't an issue for CDPQ in the past 18 months. We actually benefited from our well-diversified portfolio. Although, yes, some of the sectors in which we're invested had their challenges, but overall, I would say the portfolio performed very well in the context. So we had the ability to deploy several billions of dollars in various markets, being stocks and bond markets, right after the market correction, which contributed to our performance. So although we didn't have per se additional funding needs related specifically to the COVID, we kept an active presence in the market, which is what we intend to do so in the future. So back last year, we were able throughout the year and even within the worst part of the crisis to maintain pace. So we've issued 2 benchmark-sized term notes for a total of $4.5 billion US. So although from Treasury perspective, it didn't impact much our funding needs, we still see ourselves as bringing an important role that we play to support CDPQ's initiatives with our debt programs. Our debt programs obviously provide a tremendous flexibility, so we can continue to deploy our long-term strategy across different asset classes. It's always a great tool for us to optimize portfolio construction and efficiency when it comes to liquidity management. One of the things and one of the benefits or that changed that COVID changed for us is the way we interact with our investors and the other partners. We went with virtual roadshows, virtual meetings with different partners, investors. So I would say that facilitated, we had a much easier reach and simplified conversations throughout these periods. And I think part of these types of conversations through these new medias will remain. Hopefully we'll have, opportunities to meet people again face to face. But I think it brought good changes for as a whole when it comes to your relationships.
And Laura, where do you see how do you see the long-term impacts of COVID on the activity of the Inter-American Development Bank and the bonds?
Well, I think similar to what Amaro has already mentioned, increasingly, for now, we have recognized the scope of doing virtual roadshows as well as virtual conversations with investors. And so in that sense, part of that could be maintained even after we return to the new normal. And so subsequently, that would obviously help very much in terms of reducing greenhouse gas emissions, because you don't have to fly to go to far-flung places. So in that respect, I definitely can see a role for how virtual aspects, such as what we're doing now, could be maintained in terms of meeting with investors. And the other aspect is obviously the very increased focus, which the IDB has been doing for many years in terms of sustainability. And at the IDB, there also has been increasingly a focus in regards to climate resilience. And many of our projects are looked at focusing on climate resilience going forward.